Welcome to the Motley Fool's Crunch Time series, where we scout out a single company from their story to their opportunities and risks. Today I'm covering Ionic, the quantum computing company. Let's start with the company's business strategy. They are developing quantum computing chips and solutions. They're a leader in this emerging space that's still very small, but is seen as a growth driver for a lot of the biggest companies in the industry. They offer quantum computing as a service through cloud providers like AWS, Microsoft Azure, and Google Cloud. They also have direct sales and solutions and consulting for companies that want to work with Ionic. And that presents a lot of growth opportunities for the company. In fact, that growth almost knows no bounds depending on how big the quantum computing industry could be. And this is an emerging field. Jensen Huang said earlier this year that useful quantum computing was 15 to 30 years away. Now, he's backed away from some of those comments, but it's very clear that this is a long-term play for investors, and the growth opportunities are still emerging because there's not a lot of commercial operations today. But if this is the next generation CPU or GPU, this is the kind of company that could grow well into double digits for 10, 20, 30 years. But of course, with a company like this, there are a lot of risks. There is competition, including a number of startups and small publicly traded companies, and behemoths like Google, which is one of the leaders in quantum computing today, and NVIDIA, which is another company that has invested a lot of money in their quantum solutions. Applications are also fuzzy at best at this point, and that's because we're still in a research phase for most of quantum computing. And then there's the financial risks with Ionic. The company had $43 million in revenue over the past year, but lost $324 million. Even their cash flow was a negative $135.4 million over the past year. That is eventually going to put stress on the balance sheet, which has $588 million worth of cash today, but that cash is going to burn up quickly at the current run rate. On top of those risks, you have simple valuation risk. The market cap of Ionic is nearly $9 billion. That means that the price to sales multiple is 190. That typically does not work out well for investors when you buy stocks that are that expensive and have that much growth already priced in. This is a high growth stock growing from a small base, but even at 122% growth over the past 3 years, they're going to have to keep that up for the next decade to live up to that valuation. So what's my prediction? I think this is a very high risk, high reward stock. And given the move in the stock over the past year, the risk is simply too much to overlook. They're starting to gain some traction in the market, but there's no broad product market fit for commercial applications. They're losing far more money than they're generating in revenue, and the valuation could simply take decades to live up to. So you add all of that together, and I think this is a stock to avoid for investors. So to recap, Ionic is a leader in quantum computing, but it's also very early in the industry. There's a lot of competitors, and this is a very high risk for investors. A potential strategy for investors looking at this space is to look at established companies like Alphabet, like NVIDIA, who are also investing in quantum computing, or simply wait out the industry. See what leaders emerge and when their finances become sustainable long term. Buying early in the hype cycle can backfire on investors if they're not buying at appropriate valuations. Now, with the Motley Fool, your comments make us all smarter. So comment with your own research about Ionic and tell us what stock you want to see Crunch Time tackle next. And of course, check out fool.com/invest to get the top 10 stocks to buy right now. Thanks for watching, everybody. We'll see you here next time.